What's happening, guys? I hope everybody had a fantastic week. It's been crazy. We've got a Super Bowl Sunday scan coming at you. It is for the 12th of February and the week ahead, which means we're 2 days away to Valentine's Day. So just in case, don't forget, you don't need to end up in the doghouse. Also, forgot everything to shave my face for Sunday videos. So unfortunately, I brought all my chargers, just not the actual shaver itself. So it is what it is. Crazy week in the market last week, but we've been talking about cycles. We've been talking about themes and sectors and just like this euphoria. And I feel like we peaked out last week on that kind of vibe. And this was a very unique market cycle. And typically the cycle could be maybe the Bitcoin rally, it could be oil, it could be a bunch of different things that are fueling each other. And because of that, as one goes, the other one consolidates, that starts to go, fuels the other one for another run, and so on and so forth. So we saw that with AI and BBAI and SOUN. And that was really the sector, the theme trade that we focused on last week. Now, most, or I would say all of the biggest trades that I make are when a sector cools down, right? And really it's just about behaving on the way up and not trying to find the top, but not exhausting yourself. So when and if that trade does come, you're able to take advantage of it. And obviously this week you saw the trade on AI, you saw the preparation, you saw SOUN and BBAI and all that good stuff. Now, the unique part about this market cycle is we also had, say, Tesla. Tesla's basically doubled off the lows. And so I saw a lot of people trade that overextension on Friday and nailing that unwind. We also had CVNA. CVNA was fueled maybe by LCID in the prior week, right? So one by one, these moves are starting to come off the bottom. And what happens is people get used to these failed moves. If you look back at CVNA, every single pop sold off, pop sold off, pop sold off. But that one time that it holds and it catches people off guard, you have that secondary squeeze. And if there's a major short position, or perhaps maybe options players are on the wrong side and the market makers have to, they're forced to come into the market and buy stock to hedge, then you get moves like LCID. And when LCID happens, people think about that when CVNA starts to go. So their mind automatically is like, all right, this is going to be the next LCID. And then on top of that, we had BBBY, which doubled intraday to 7. Then they raised a whole bunch of money. When BBBY went, it started to fuel AMC. It started to fuel GME. And once BBBY came in, we had the unwind on those trades as well. So you can start to see this market euphoria that started to happen across all these different cycles. And we were fortunate to be really prepared for that. And I don't really know where it goes from here. I'm curious, but at the same time, I would be very cautious getting biased in any one direction, right? So for example, is AI going to just consolidate and start to head up, and maybe this was the long-term base and it consolidates for a week or two and then we start to see it have that secondary move? Or was this all part of that peak euphoria? Everybody's on the wrong side, had some huge moves, and now they're just going to be a slow and steady fade over the next 3 to 6 months. We don't know that information yet. But what we do know is that you don't want to come in with a heavy bias until it proves to you which way it wants to go next week, the week after. And just be cautious of this sort of consolidation pattern where maybe it looks really strong, then fades off. Maybe it looks really weak, comes back, right? So there's got to be a lot of that chop. There's going to be a lot of great trades, but it's up to us not to get too overconfident in one direction. Also, I think the liquidity is going to be different moving forward. We had a lot of pretty much anything goes. Tesla action, you could size what you wanted. CVNA, obviously, on the front side, very dangerous to be sized. But as things started to progress and as the trade started to come in, there was a lot of liquidity. And really, not that I'm recommending it, but you could technically have scaled to as much as you really wanted to, within your comfort zone. You can't always say that with things that take um, HPCO and some of these other 1, 2 to 5 million share float names, where you're one swipe away from getting into a disaster. This is different when you're trading LCIDs and CVNAs and even Riot. That was another one. Riot and Mara was another part of this whole entire cycle, that straight up, and then just complete unwind. So that's why I called it sort of market euphoria. Am I thinking the market's going to crash? Not necessarily. I mean, I'd rather things continue to go up. It's better for everybody. But I just want to be aware. Be aware moving forward that tape may be different. And sometimes, you get those warning shots and then you're slow to make changes. So this is sort of that conversation. Make sure you're respecting risk. Make sure you're not just adding because it worked last week or the week before, and really dial it in and make sure that you're trading because, there's a proper edge there. You're trading because you should. A lot of times we just try to find enforced trades to try to keep up with what was working before. But if you do that, you're going to end up, you'll see, you'll end up getting really, really chopped up. And that's when I start to have difficulty after a really, really hot run. And I don't listen to the warning shots like, hey, the market's changing a little bit. So be aware of that. Be cautious. Let's see if I had any other notes. Tesla, BBBY. Yeah, LCID. Oh, I had a couple other, like LCID. If you look at that, you had the same thing with CVNA. You also had the same thing with W, Wayfair and Coin. They all kind of did the same thing where they've been peaking out, and then they finally held the trend. And, everybody kind of treated it like before. It's obviously going to fade right back. But this time it didn't. They all squeezed out a little bit further than you would expect. Then they all start to come in. So we also finally had on Friday, I would say all of this, because of the action, fueled the small caps as well. And there hasn't been a day over the last 2 weeks where we haven't had 100, 200, and even sometimes 400% gainers, right? You wake up to a couple 100% gaps and they either continue to go or they unwind. And Friday, there was a lot of unwinding. So be aware of that. And I think I think it's safe to assume we're going to continue to have some serious action, some seriously good trades. But just put the brakes on out of the open and let's get some feedback, get some more information, rather than just being quick to react and kind of ruining it for yourself. So two of the main questions that came in were about sort of identifying these market sector moves and themes and all that stuff. So hopefully that kind of answered those questions, by going over all the different things that came together for this particular move. But otherwise, just it's always good to understand which names are moving, which names typically move together. Because what happens is when there is that sector move, there's this underlying bid that always lasts longer than you think. And dips actually become basically traps, right? They just literally dip it to collect shorts to fuel it higher because there's just so much demand in that underlying bid that it just keeps on getting soaked and soaked and soaked and soaked. So anyway, that's that. Next question was, how do you know when it's soaking and how do you know when it's just going to sell off? You don't. So what I do is I try to identify key levels. The way in which that I identify key levels is, where is it hanging around? Where is there congestion? Where is there consolidation? Where is that spot where there was like some indecision and there was a lot of volume that went off and it kind of peaked out, came back down. Then it started to meet this level where there was a lot of volume that went off, but it didn't necessarily stay heavy, right? And it came back. So now I've got those two levels. And anytime that I am trading the front side or anticipating that trade, I want to assume that that top level may exhaust out. I don't want to step in front of it. I want to let it exhaust out, prove. And then as it comes back under that level, I know that there's a good chance it'll stay heavy. If I'm wrong, at least I'm not, you know, fighting no inventory, right? At least now there's more sellers that might come to the plate. You know, the problem with trying to find the top one stuff is, what if nobody comes to the plate to sell? You know, and you're the only seller. You know, only seller. It keeps on going. So I always like to see that shift so that I am competing with not just short sellers, but I'm competing with sellers. Competing with sellers. You don't need to find the top. I'd rather scale in more size lower with a better risk to reward than unknown risk and too much size and end up missing the trade altogether. Then as it comes under the key level, just like GSUN, GSUN is a perfect example, or excuse me, XPON is a perfect example on Friday for those of you guys that were in the room where 320 was that key level where it was soaking. I don't care if I think that it's going to go to 250. If 320 continues to soak, you got to throw away that bias. You can't force that trade to do what you think. You have to listen to what's going on. And it was clear as day. Doesn't matter if it goes to 315. How does it react when it goes back to 320s? Well, guess what? Swiped right back through it and firmed up. So is that a confirmation? No. So why are you sizing in short, anticipating it to fail? Guess what? Ramped right back up to 350s, which was the other key level. The levels we were using on Friday, it's 320, 350. Right in the close, if I remember correctly, it was like 354, and then fades all the way down to 280s, right? So basically, everybody that got confident at 320s and started to size in, anticipating that unwind, gets blown out at the top of the channel and then unwinds. So it's just small little changes to not anticipating stuff and not, kind of forcing the trade to do what you think, but let it prove itself. And then the next question was, what do you look for during your morning prep? So every morning at 8:50 a.m., I get on the broadcast and, yes, I put a lot of stocks on watch. Typically, I put my main watches. Those are really what I'm looking at. Some failed follow through, some continuation type trades, and then just charts that I know I want to see. And, just seeing them allows you to react that much quicker during the day when they come on your radar. So it's not that I'm watching all of them. It's just you're familiar. You're familiar with what the chart looks like. And because of that, it's, split second decisions rather than like, let me go look at the daily. Let me go look at this. Let me look at that. You already know. And so for my pre-market prep, my goal is, okay, what was I prepared for last night? And what is proving me correct? What did I have a good read on? If I have a good read on it, then that means I'm probably going to trade it well. If it's doing something that I'm not expecting, then there's a good chance that it's going to maybe be an outlier move. If I was really, really confident on a particular short setup, but it proved me wrong and it was continuing to hold trend and going, there's a good chance that could have an outlier move because I'm probably not the only one that had that bias, right? And that's when I want to be kind of hands off and let all the emotions kind of move on. And I think that's really the biggest secret in a situation like this, in small caps, things like that, is just let it all happen. You don't have to worry about getting the top. Get the meat of the move. Let everybody else try to figure it out. There's that channel. We were talking about it on HPCO. And it's just steady channel for like an hour or two. But yet, people still carry a bias. Why? Why? You have no edge. Let it break. Let it pop. And then start to think about where there's edge. But trying to guess which way it's going to go, you can't sit there and say, you've got edge. It's 50-50. So I always look to be, what am I been proven right on? And then that's where I focus. Liquidity, the biggest volume, the biggest action. I'm going to go to something that I can get in and get out and not really worry about liquidity, not worry about circuit halts. I don't care how great it looks or how crazy it is. I'd rather take less risk, be able to scale more confidently than, trade that hot stock of the day. And as you know, and maybe yourself, maybe others, but blinders go on for people. Anytime something's going crazy, they feel the need that they have to trade it. I don't know why. I was the same way. But once you overcome that and say, you know what, I don't have to trade that one, or I can wait. I don't need to trade that one out of the open. A lot of times you'll notice it takes all your focus. And then this one that you were ready for, this one you were ready for, that one you were ready for, all perfect breakouts, unwinds, whatever you wanted. But instead, you were so focused on this crazy one that you lost sight of the layups. And I want to focus on the layups. All right, so the next question was about reading tape. And I think the easiest way to do this, and I'm a broken record on this, is record your screen at least once a day, usually probably 3 times a day. I jump in the lounge and I say, record this action right now, because I feel like the trade's closed. It doesn't mean you have to take the trade, but at least you can see what it looks like in real time, because not every time is the same. HPCO is a perfect example. You guys saw me tweet literally a minute before the action happened, and I said it's getting very, very close. Put the recorders on and watch how this reacts. It's either going to dip and then rip into a circuit halt, or it's going to rip, stuff, and slam into a circuit halt. And literally a minute later, rips up and then slams, goes into a circuit halt. So these are the things that you can actually anticipate and stay away from. Maybe you were short. Maybe it would prevent you from getting stopped out and then having to rescale in or whatever. But record the action on the big ones, on the big action. And I really only try to focus on tape on small caps. Somebody asked me last week about, applying it to big picture or large caps and things like that. Typically, whenever I try to get a solid read on large caps, I end up getting biased and wrong. And what I mean by that is applying the same soak, kind of scenario or hidden seller, this or that. You got to just go with it on large caps because it's real volume, it's real players. It's not maybe just one fund trying to create this illusion that, X is going to happen, but really Y is going to happen. So that's really the key for me is to record. And then you can go back and then you can ask educated questions about what you saw. And also a good way to do that, Sam, one of our moderators, Trades Turbo Trades, he had posted that HPCO move. So you can actually go back and watch it in a simulated or not even it's a real-time replay, seeing it actually happen, how it happened, what happened. And it worked out, in this case, it worked out perfectly well to showcase what that situation was. But if you didn't record it, you can go back and check it out there. So check out that tweet. All right, let's get into scan for the week ahead. All right, guys. So for the second part of scan, as always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you want to be told what to buy and sell, I'm sure you can find someplace online, somewhere, somehow. Would I recommend it? Absolutely not. But for some of you guys, if you want to be told what to do, then, by all means, good luck. My goal is to make you self-sufficient, thinking out of the box, getting prepared, and what makes a particular trade a good setup, a high probability setup. I don't want to just be trading and being told, I don't want to be told what to do and where to buy and where to sell and all that kind of stuff. You learn nothing, right? This is about becoming self-sufficient. This is about becoming a career trader, not a hobby trader. Now, one other thing. Kyle Warner and Bob Roon, you guys have the t-shirts for last week. All you have to do this week, leave a key takeaway in the comment section and the timestamp. That way other people can see it. They can go back and review it, and maybe they have an aha moment as well. 2 things. Traders for a Cause. We have a premiere coming out tomorrow night, I think 6 p.m. or so. With the trip to San Diego. It was awesome. Met a lot of great people. A lot more people came than I would have expected. But it was a ton of fun. We checked out the Clear Street office, which was really cool. And I think that you guys are going to enjoy it. You get to see some of the people that, for those of you guys that do trade at Center Point, you can see some of the faces that you talk to literally every single day. And then the second thing is I said it was going to be this week, but next week we are putting together the deal of a lifetime. If you've been on the fence about opening an account, if you've considered opening an account at Centerpoint, but we have a really, 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 really good deal coming, and it will be for a limited time because it is so good. And we've been just trying to figure out the logistics and the last pieces of the puzzle before we announce it. So that is next week. But if you are interested, feel free to email me or leave a comment. We can always connect beforehand. However, the official launch is next week, so keep an eye out for that. Let's get right into Scan for the week ahead. All right, guys. So first up, we've got the main watches, we've got failed follow through, we've got continuation, and we've got staying familiar. Main watches are the ones where I feel like I'm going to trade those ones first and foremost. I feel like they have the most edge, the biggest opportunity, or I've been trading them well. So XPON is a great example of a situation where, I think a lot of people got a little too complacent, thinking that every single time it's going to unwind. Every time in the past, it's gapped up, it's faded off. We're in a little bit of a different market. There's a lot of volume, and sometimes people jump the gun a little bit into assuming that it's going to unwind like every other time. So the other thing too that we've talked about in the past is, for example, this nice unwind here, VWAP staying heavy all day, flushes out. You can't always trust a flush, because what if all of this downside volume was just shorts kind of pressuring in, pressuring in, pressuring in? What if nobody was a seller and it was mostly all just shorts? And then when it swipes up, you don't know, are they going to meet sellers, or are they going to start to churn the shorts into a squeeze? And that's exactly what happened. So we can now safely probably assume that a lot of this was short players getting kind of trapped, and then they got squeezed out. So my goal is always to identify where the congestion spot is. To me, that was 320s and 350s. That was the two levels that I put in the room on Friday to, kind of make this trade a little bit, not necessarily easy, but easier. And the reason I say that is because a lot of people do not identify these levels, and they usually make assumptions that maybe it's going to break down at 320. So then they hammer in. And then when they hammer in, guess what? It checks in with VWAP, comes right back over, and boom, they get popped right over that 350 level. And they're out. They're exhausted, and they give up on the trade. However, if you start to identify these key levels, at least you can make adjustments when it comes down. You can rescale in after it exhausts out over that line, and you can maybe make a bit of a cleaner trade rather than getting chopped around like a lot of traders do. And on top of that, late day, you can see how this line works, right? And it came right back to it after hours. So anytime it's over 320s, we want to be breaks on and be a little bit more cautious as far as assuming the trade that you wanted, possibly an unwind, is going to happen. And as it's over 350s, we want to assume that that's all the stubborn traders, everybody that, did not follow the rules, blowing out. And because of proper, kind of trading, proper covering maybe in the lows, you're able to actually take a trade over that 350s area after it exhausts out. Whereas most people would be covering in an emotional panic. So I would love to see it kind of clear out this line come Monday morning and then fail to follow through. Where did I get that line? Look left. This prior top, this day it had a flush under that as well. But I'd love to see it sort of break out over this level and then sit back throughout the day. I do think that there's a little bit of shorts still stuck in this thing. Maybe got a little too aggressive. You can see they got blown out right into that key level, came right back down, but now we're back after hours. SOUN, we've got BBAI, and we've got AI. These, nice to see it ramping up after hours. Again, I don't want to sit here and think that AI is done, right? It's normal for a huge move to come back, consolidate, and then start to find its next move. Whether or not that's just going to be hanging out for a couple days and then it starts to unwind, or is it going to trap for a couple days and then break out again? We don't know yet. And because of that, we don't really have a trade on SOUN or BBAI until AI decides what it's going to do. That said, SOUN had an amendment to their S1 on Friday. We have a little bit of information as far as what they're trying to do there, but we're still in trend on that one, and it is holding those 350s on the daily. You can see that all the wicks. So until we start to have some relative weakness compared to, say, something like AI, we want to be cautious getting too biased on this trade. Same deal with BBAI. The key there was the 495 level. And at this point, I would probably start to use those 450s. If 450s continue to base, I'd be cautious having this crazy short bias. This makes no sense. It has to go down. But if it peaks at 450s, I would think that we're going to start to see a nice little unwind on the daily. Now, whenever we have high volume like this, it always takes longer than you think. It takes a very, very long time to slowly but surely get back to where it came from. Sometimes 30, sometimes 60 days. The bigger the volume, the bigger the market that's created, the more players are going to be trading it on the way down. So AI, BBAI, and SOUN are all in a basket for me, and I will be trading accordingly. Ideally, we have some type of gap up, flush on AI. Maybe we even go back to 20 or 18 before it starts to rally up. But just be cautious coming in and sort of forcing your bias to work, because that's where I usually get in trouble if I try to force what I think should happen and the tape is suggesting something else. CVNA, higher the better. It's been a fantastic trade. It's just like LCID on the daily. It's just a lot of blowout of the early shorts and then back to liquidation mode. So just be super, super cautious trying to, jump in front of this thing. But after we have those morning shoves and after it exhausts out the early shorts, it's been a very, very clean trader. And ideally, we have some sort of unwind back to 7 or 8 in the short term. So under the next section, that is failed follow through. Failed follow through. Typically, what I'm looking for on failed follow through moves is some sort of morning ramp, and then look for the sellers to arrive. I don't want to be the only seller. I want to see it rip up, pull back, retest, and fail. It runs into sellers, and then I want to be part of that trade. So this was a fantastic trade on Friday as well. Again, identifying the key levels, which was around that 220 to 250 level. Everything over 250, or excuse me, 240 to 220 was the levels that I gave in the room. And so if you are, hammering in at 220, then you probably got squeezed out. If you are cautiously waiting for 220s to basically peak out, then you end up having a nice little trade here as it exhausts out late day, and then you catch the nice unwind. So I had posted that trade. You guys probably saw that, but cautiously waiting for the 240 blowout, participated, covered into the flush, ramped back up, participated, covered into the flush, and then slowly scaled into the trade from there before I left a little bit early for the day. Same deal, SQL. Steady fader. We finally got exactly what I wanted. CELZ was very similar, only we didn't get that unwind throughout the day that was, too big. It was a nice unwinder, but realistically, this midday kind of trap was a little annoying. And then, sure, it was 30 cents a share, but there was still a lot of meat left, but we just ran out of time. So it was nice to finally have a nice unwinder throughout the day, such as SQL, where, again, you can identify where the congestion spots are. Once it broke through under those support levels and the prior support, looking across here, becomes the resistance, we had that steady unwind. So again, same deal. Ideally, typically if I'm going to draw a line, where I'd like it to go, I'm looking at the prior level of support. So I'd love to see a push up into this key area, which is about 150s, and then possibly fade off from there. LUCY, this one I would put in the basket of, something like an ARQQ type trade. This one I've been fading each day. It's been pretty nice. Same deal with GSUN. You want to see it ramp up and then look for the sellers to come in. That concept has been working extremely well. And again, the idea was the same as ARQQ. Same deal on LUCY. So all of these, same concept, same sort of thesis, cautious. This one doesn't have as much volume, but in my opinion, they kind of set the trap, liquidity trap. Here came the cover on T+2, and then that was it. Now that trade's, over, and I think that's kind of what's unwinding right now. OSCR, nice breakout, no position here, but worth an eye just in case it starts to firm up. Same deal with TCAT. This was a nice early scan earlier this week, and it's been steady up since. You're starting to see a lot of this where they ramp it up really high and then they just kind of play coy and they just let it die off and like, yeah, no, it's okay. We're not there anymore. Just kidding. Here we are. And they ramp it back up. So basically they bait shorts. They let the shorts win. It consolidates and then they make them pay. And that's been really what we've been seeing on a lot of these trades lately. And it's something to take into consideration. I think you even saw it on that SQL, where they kind of let shorts win and then big gap. And there was a few other ones. What was it? No, not this one. SFQT. I forget the name of that one, but same deal. It's just where there's this huge ramp up, consolidate for a few days, and then they force the cover to come in. You kind of see it on CETX. They've got this huge ramp, and then you can see the wicks getting bought up. This is a recent reverse split, super thin, possible circuit halts. We'll have to see what happens with that. TCBP, another nice chart there. I have a position on this one. This one's been nice, and they've had a lot of these huge wicks, but they're actually holding an underlying trend. So that's what's really drawn me to this one. It's nothing I love, but it's just something that I want to stay focused with as the move progresses. If it breaks down, then forget it. But if it does start to build and gets over 7, 8, 9, I do think that this could have a pretty wild move. But again, it has to prove that that's what it wants to do. And then last but not least, I just want to talk a little bit about the other trades that I had given you guys. When the market starts to get a little shaky, right? As it did, it came in. I had given you guys a basket of a bunch of names. And on that was Peloton, right? SPCE, QS. We got Mara, Rivian, LCID, a bunch of these, DAO rather, and probably missing a few, W, but most of it was SPCE, SPCE, PLTR, PTON, QS, right? And so for me, if I want to get involved in a trade, I like to spread my risk out. Yeah, you could go huge size on one trade, but what if there's that headline? So I'd rather be spread across, 3, 4, 5 different names, all that usually move with the market potentially. But that way, just in case, you never know, just in case a headline comes out on one of those names, you're not all in on that one. And you've got your risk spread across a bunch. And then that way, you can take on more size, but with less risk per se. So anyway, hopefully you guys were able to take advantage of some of those trades on the unwinds. There's going to be plenty more of these. Focus on trades that are overextending. Focus on not jumping in front of stuff, because if you do, you end up missing out on the entire opportunity when things start to turn. You second guess yourself. You take it off radar and you say, basically the hell with it, and you move on. And that's what I want to avoid here. I want you guys to see just how, clean some of these moves are. Even like W, if you're trying to find the top, you might miss this huge opportunity, but looking left, where could it potentially squeeze out to? And it pretty much goes to this prior where it peaked out, right? And then it unwound. But if you're over here every day trying to find the top, you're going to get squeezed out and you're going to say, that's it, I'm done with it, I'm not going to touch it. And that's the whole concept here, is let everybody else pay for the information, and then you come in and you take the prize. So fantastic market right now. Again, if you are having trouble in this market, relax, review, think about what you could do, what you could make for changes, and hopefully you're able to maybe make a good chunk this week, especially in a situation in a market like this. So that's it for Scan tonight. Again, if you are not crushing it in this market, relax. It's okay. Not everybody is a volatility trader. And you have to understand when your time is to shine and when it's not. We talked about this before. My January was pretty slow. I mean, it was good. It was steady. It was consistent. But I know that there was a lot of traders having outlier days and really letting these swings work and really performing exceptionally well. I didn't let that bother me. And now February came, and I mean, it's just been insane. So I need to be aware of that, just not to ruin that. I need to be aware that I'm still staying focused and making sure that I'm just trading the A+ setups and the very high probability trades, and not every trade, and not sizing every trade. We talked in Sam's webinar this week about, sometimes people want to size up. You have to find out what you are best at. Sizing up is not just about coming to the market and putting on double size, triple size, quadruple size. There are particular setups that I scale, that I size, such as CVNA, which you guys all were prepared for, such as AI, which you guys were all prepared for. It is the same setup over and over and over again. That is my A+. Maybe it's not everybody else's, but that's my A+. You have to find out what you're best at, and you have to keep doing that over and over and over again. And watch what it does to your year. It might be once a month, it might be once a quarter, but if you focus on that one trade, what you are the best at, it will help you change the trajectory of where you're going on the year. We'll see you in the room on Monday. Have a great weekend and enjoy the Super Bowl.
I'm here learning how to play beach volleyball with Marcus Partain and Brian Miller, who apparently know what they're doing. Traders for a Cause is here to clean up the beach in Encinitas, hang out with our friends at Centerpoint Securities, and explore this beautiful part of Southern California. Welcome to Traders for a Cause San Diego.